And in London, the FTSE 100 gained 45 points earlier today after losing over 200 points yesterday. But there are other developments coming out from the UK. Let's talk to my colleague Juliana. Good afternoon, Juliana. Well, the Financial Conduct Authority wants banks to stop charging interest on the first £500 of existing overdrafts for 90 days for people struggling financially because of COVID-19 pandemic. Is this piece of news being traded in the market today?
Good afternoon, Chimeze. Well, no, it hasn't hit the FTSE all-share or the currency market. But look, this is really good news for those who are struggling during the COVID-19 crisis. It appears as if the city watchdog and the regulators are working hand in hand with the government to try and, force these banks into doing whatever they can to assist people in their dying need. Yesterday, the business secretary, Alok Sharma, he issued a stark warning to banks, just telling them that they should do whatever they can to try and assist struggling businesses at this time by supplying loans and not hiking up interest rates as much as 10%, which is what some of these firms are saying it. And the Financial Conduct Authority today, they have just announced that they want banks to offer struggling individuals up to £500 of an overdraft. And this will be a free interest overdraft, something you won't have to pay back for at least 3 months. And they're also asking banks to offer credit card repayment holidays. And now typically when the FCA does come up with some sort of legislation like this, it takes weeks and weeks to get through. But according to some sources, they'll be rushing it through to make it into legislation. So this could be available to some customers as early as next week, Thursday. But let's have a look at the FTSE. At intraday, the all-share is up, surprisingly, 0.43%. The FTSE 100 is up by 0.5%. And the FTSE 250, that domestic market, is down 0.87%. In currencies, the pound's doing pretty well today, up on the dollar by 0.53%, up on the euro by 0.95%, and also up on the Japanese yen at intraday by 0.77%.
And supermarket chain Morrisons is in the news again. This time, the company says it's tripling its bonus for UK staff this year. This is at a time when most companies are cutting staff. How is Morrisons able to keep its head up?
Well, you know what, Chimeze, it's not just Morrisons. It's a lot of these big four supermarkets. Marks and Spencer's, they said they're going to be offering staff bonuses by about 15%. Aldi, Lidl, Tesco, they've also said that they'll be offering their staff bonuses. And it's because March last month was the highest month on record for grocers. As Prime Minister Boris Johnson was telling people to work from home and to stay at home to support the NHS, millions and millions of shoppers across the United Kingdom were bundling into supermarkets. Of course, the first issue we had was the stockpiling, but then a lot of people were just going into these supermarkets, putting extra food in their cupboards to keep them sustained through the lockdown. And because of these record increases in supermarket growth, a lot of these stores are feeling that now is the time to give back. Morrisons is just the latest of them. They'll be offering an extra 6% bonus, which is the equivalent of an extra £1,000 at the end of the year, which is good money if you can get it. But look, the chief exec was just saying that they want to thank their staff tremendously for all of the hard work that they've been doing throughout this pandemic. In the UK, Chimeze, not just in the UK, I think across the globe, everybody is focusing on the new superhero, which is health practitioners and health staff. But of course, there are other people behind the scenes who deal with logistics, and supermarket workers are one of them. And this is the way supermarket bosses think they can repay the staff. And I think it'll be very nicely welcomed.
Now, this casino operator in the UK has been hit with a £13 million penalty by the Gambling Commission. That's the largest imposed by the Commission to date. What has this casino done this time?
Well, Caesars, it's the UK arm of the big US casino giant. And really, in the UK, I've spoken about this with you on numerous occasions, Chimeze, that the government are really trying their best to crack down on gambling addiction. Approximately 4 million people in the UK are addicted to gambling, and there have been several measures taken by the government to try and stop people from getting addicted, and coming down really hard on these gambling organisations is one of them. When it comes to Caesars, this is in regards to 2 customers that had come into their stores. Apparently, these are VIP customers. VIP doesn't mean you're very important, but it means you're one of those individuals that are willing to stake a very high bet. And over a series of just 3 months, one of these customers lost £3.5 million, which is a huge amount of money. And they're basically being accused of not safeguarding these customers. They could see that they were spending hundreds of thousands of pounds a week. They weren't asking where this money was coming from. They wasn't looking after their state of mind. So yes, they have got this record-breaking fine. And also as well, the Gambling Commission is saying that a lot of these companies are exploiting vulnerable customers. So yes, this £13.5 million will hopefully serve as a warning for other gambling sites to look after their customers. And if anybody's got a problem, stop allowing them to come into your store.
I just hope they learn a lesson from that. Anyway, thank you, Juliana. And European stocks fluctuated today as markets react to developments related to coronavirus pandemic in the US and around the world. Let's talk to my colleague in Frankfurt, Conrad Bosen. Hello, Conrad. Well, the weekly claims for unemployment benefits in the US have been the most anticipated piece of data for the markets worldwide. Last week, more than 3 million Americans claimed help because they had lost their jobs. Are the latest numbers out yet, and what are they saying?
Yes, they're out, Jimmy, and they are a lot worse than the worst anticipations on the market. 6,648,000 Americans have applied for first-time unemployment benefits in the United States last week. We had a wide-ranging numbers of anticipation for that, between 800,000 and 6.5 million. Now the number is actually stronger than anticipated, which shows the swift, the strong, the crass impact of the coronavirus lockdown on the economy in the United States. And look at what the German share index DAX has been doing during the last few minutes. It has, given up the zigzag sideways direction, and it's on the fall again. And this after a strong decline we've seen yesterday.
Startup incubator Rocket Internet has ended its holding in Africa's online market space, Jumia. Is the corona pandemic the reason?
No, the sale of the 11% share that Rocket Internet held in Jumia last November, that was the last time when Rocket Internet reported about this holding. The sale of this happened before the corona epidemic broke out, but the epidemic is probably playing a role in the timing of the communication here. You know, since Jumia went public, was brought to the stock market in New York about a year ago, the stock price had been in constant decline, with especially a push downwards since the beginning of the year. So more and more people on the market and more people in the startup and incubator scene here in Germany had been asking, when will the time come when this holding will really become a problem for Rocket Internet? So Rocket Internet decided to communicate the sale now. Because, of course, with the lockdown and with the pandemic and with the turmoil on the financial markets, those concerns had become louder and louder. I personally think that Rocket Internet should have informed much earlier about this sale.
And in the UK, British Airways is reported to have negotiated a deal with trade unions, including the suspension of jobs of about 80% of cabin crew, ground staff, engineers, and people at the head office. How are markets reacting to this, and how are the other European airlines doing?
A market reaction is positive. The share price of IAG, International Airlines Group, which is the parent company of British Airways, are stabilizing today, or they have been up until now. I didn't manage to check the share price shortly before the show. But also Lufthansa, all the other European airlines look pretty stable today. There is a positive reaction to this deal at British Airways. It is adding to a lot of deals and support measures that were implemented for European airlines. 87,000 employees of the German airline Lufthansa and Lufthansa Group have entered reduced work hour schemes, which are, schemes where the government is paying the wages for the workers. Also, Lufthansa is reported to plan to apply for direct state aid, maybe even, a share sale to the government. So a part nationalization is something that is being discussed behind closed doors, of course. Nothing is official yet. Air France, KLM, the French-Dutch large airline, also has applied for state aid. Whether or not all airlines will survive is a matter of discussion on the trading floors right now. We've seen a few casualties already. Flybe in the United Kingdom. Today, Thomas Cook, with its small fleet, reported that it's going out of business. And if you talk to experts, they say it's very likely that there's more to come.
Right, Conrad, we just have one more day to go for the week. In the meantime, enjoy the rest of the day. And stocks in Asia Pacific were mixed today as global markets continue their rocky start to the second quarter. Mainland Chinese stocks recovered from earlier losses to jump on the day, with the Shanghai Composite up 1.59%, while the Shenzhen Composite advanced 2.258%. Hong Kong's Hang Seng Index was 0.69% higher. In Australia, the ASX 200 fell 1.98%. And of course, South Korea's Kospi rose 2.34%. Japan's Nikkei 225 declined 1.37%. The Topix Index shared 1.57%. Overall, the MSCI Asia ex-Japan Index rose 0.19%. And U.S. stock futures rose in early morning trade today and pointed to gains at the day's open as markets tried to rebound after kicking off the second quarter in the red. Dow Jones futures rose 398 points, indicating a gain of about 331 points at the open. The S&P 500 and Nasdaq Composite were also set to open higher. Stocks posted steep losses on Wednesday to begin the second quarter as the coronavirus outbreak continues to wreak havoc on global markets. And crude oil futures jumped 10% in early trade today after U.S. President Donald Trump said he expected Saudi Arabia and Russia to reach a deal soon to end their oil price war. And Russian President Vladimir Putin called for a solution to challenging oil market. Brent crude futures rose 11.36% to $27.55, while U.S. West Texas Intermediate crude futures increased 10% at $22.34. Trump said he had talked recently with the leaders of both Russia and Saudi Arabia and believed the two countries will make a deal to end their price war within a few days, lowering production and bringing prices back up. And gold prices dipped today as the dollar held firm, while investors awaited key U.S. jobless data amid mounting signs of a recession due to the worsening coronavirus outbreak. Spot gold fell 0.3% to $1,586.24 per ounce, while U.S. gold futures rose 0.6% to $1,600.20 per ounce. Elsewhere, palladium rose 4.2% to $2,308.41 per ounce. Platinum climbed 0.9% to $724.25 an ounce, and silver gained 0.9% to $14.12 per ounce. And when we return, we'll look at the domestic commodities market and more. To stay with us.